Chair Landrieu, members of the committee, thank you very much for the opportunity to be here today. EIA, as you know, is a statistical and analytical agency.
Could you speak a little bit closer into your microphone? And all of you are going to have to press your buttons and then lean into the microphone. Thank you.
Chair Landrieu, as you know, the EIA is a statistical and analytical agency within the Department of Energy. By law, its data and analyses are independent of approval by any other officer or employee of the U.S. government. So my views should not be construed as representing those of the Department of Energy or any other federal agency. EIA's latest short-term outlook forecasts total natural gas consumption will average 71.3 billion cubic feet a day in 2014. That's a slight drop from 2013 as power generators respond to a year-over-year increase in natural gas prices. In 2015, forecast natural gas consumption again falls slightly as a decline in residential and commercial use more than offsets increased demand from industry and electricity generation. On the supply side, EIA forecasts that natural gas marketed production will grow at an average rate of 2.5% in 2014 and more than 1% in 2015. Production growth in the Marcellus Formation, centered in Pennsylvania, but also evident in West Virginia, is particularly noteworthy. EIA also expects increased drilling activity in the Haynesville in Louisiana and Arkansas and the Barnett in Texas. The past winter of prolonged, widespread, and very cold weather, which is continuing throughout the Northeast and throughout much of the United States, has led to a record-breaking natural gas withdrawal season. EIA expects natural gas inventories at the end of this winter will be at the lowest level in 11 years. However, EIA forecasts for production and consumption indicate that operators will make record high storage injections between April and October in order to substantially rebuild inventory levels. Growing natural gas production in recent years is already having a significant impact on natural gas trade by displacing some pipeline imports from Canada while enabling increased pipeline exports to Mexico. As world-scale domestic natural gas liquefaction plants begin to come on stream, EIA expects the United States to become a net exporter of natural gas beginning later this decade. Turning to longer-term projections presented in EIA's annual energy outlook for 2014, natural gas production from shale gas, tight gas, and offshore natural gas resources grows steadily, increasing 56% between 2012 and 2040, when production reaches 37.6 trillion cubic feet in our reference case. The largest contributor, shale gas, will be over 50% of total production at that time, with tight gas and offshore gas production also increasing. Alaska's natural gas production rises with the opportunity in the middle of the next decade for liquefied natural gas exports to overseas customers. The complete AEO 2014, the Annual Energy Outlook, which will be released next month, includes cases that examine uncertainties and alternative assumptions that can substantially change this outlook. For example, projected natural gas production in 2040 is roughly 10% above the reference case level in the high oil price scenario and roughly 20% above the reference case level in the high oil and gas resource case. Projected prices and export levels also differ considerably across these cases. As producers develop lower-grade resources over time, EIA sees the spot price at Henry Hub increasing at about 3.7% per year in the reference case, from a low of $2.75 million $2.75 per million BTU to $7.65 per million BTU in 2040. Even so, energy-intensive industries in the United States benefit from shale gas, as both the availability and price of natural gas are attractive compared to the situation in other world regions. Generators using natural gas are also expected to capture a growing share of total U.S. electricity production. Turning to natural gas trade, pipeline exports of U.S. natural gas to Mexico grow by 6% a year in the reference case and are more than 3 times net pipeline imports from Canada by 2040. From 2012 to 2040, U.S. net exports of LNG increased by 3.5 trillion cubic feet, with the remaining volumes originating from export terminals located along the Atlantic and Gulf coasts, along with 800 BCF of LNG originating in Alaska. Future U.S. LNG exports depend on a number of factors that are difficult to anticipate, including price convergence in global natural gas markets, competition with oil, the pace of natural gas supply growth inside and outside the United States. While the AEO 2014 side cases are not yet completed, projected exports by 2040 in our high oil price case are nearly twice as high as the reference case. LNG exports in the high oil and gas resource case, which uses a reference case oil price scenario, but is more optimistic about the size of the resource base and technology advances, falls midway between those in the reference and high oil and gas price cases. Thank you, Chair Landrieu, for the opportunity to testify before the committee.